get a take also from Rajiv Sharma on this. Rajiv, this was along expected lines, but, a very clear statement and a warning bell coming in from the Vodafone CEO. How are you viewing some of these comments? What do you feel could be in store, given that we haven't had any reprieve yet on the entire AGR issue?
So I think last week itself, a few days back itself, government has taken a step in this direction by forming a committee which is looking into the various demands from incumbents around, relief in spectrum payments, relief in penalties and taxes, lower license fees. So that's already in place. This comment from, coming from Nick Reed is more reflection of real state of affairs of the company, the challenges that they are facing. And seems to be a very honest opinion, about how things look to them.
Rajiv, do you think it is more than obvious that the only way Vodafone and Idea could go is that they will have to go to the NCLT way now?
Let me put this other way, that in case there is no relief, such as, let's say, this whole AGR dispute outcome, the payment there is not spread over 10, 15 years. And, various demands around GST input credit or lower taxes, and even the spectrum moratorium doesn't kick in. So if 2 to 3 elements around this are not kicking in and only incremental steps are taken, then yes, you may be right. But if some of these demands are taken up, and the most of meaningful demand could be a floor tariff on voice, even if it's 10 paisa. That could add 4,000, 5,000 crores to the cash flows. So meaningful steps may prevent it. Otherwise, again, the statement itself from the CEO reflects that going concern is a challenge, which means NCLT could be the next step.
Would you take a long shot and advise your investors that, look, the consolidation in the industry has happened. Whatever could go wrong has gone wrong in terms of regulation and pricing, and this is the end of the news and end of the regulatory problems. And a year from now, 2 years from now, telecom stocks will be higher?
Even the best of the guys who would be best on crystal ball gazing will not be able to do so. The way to look at it is
if a client says, Rajiv, I have Bharti and I have Idea Vodafone, should I sell it or should I buy it? You have to give one advice. So what will you say?
Okay, let's take a step back. So when this news came in, Vodafone Idea share price was around $5. Even without calculating the SUC related payout on the AGR, even then the negative impact on share, per share was $10. So which tells you that a lot depends on what will be the payout for Vodafone Idea. And yes, what market has been factoring in Bharti's case, that it is very unlikely that Vodafone Idea would survive, and it will be a two-player market, and Bharti share price has not done that badly. And there is, when we speak to investors, we get a sense that they are, trying to price that in Bharti share price. But even if it becomes a two-player market, the first step will be that Bharti will have to make those payments, which will slow down Bharti's capex. Bharti's tower sharing agreement with Vodafone will come under question, and then those benefits around, tower saving cost, you could run a low-cost structure, even vendors, all that will first hit Bharti before the upsides of a two-player market.
Yeah, grim situation, this one. Rajiv, thanks for joining in.